Alright guys, in today's video we're going to talk about how to save and get paid with the VDIGX HSA dividend strategy. Now this is a low risk strategy for you to get paid because in our last video we talked about how to save and maximize your health savings account. Now that is specifically mainly for young people, but if you're older and all you want to do is you want to get passive income, you want to get paid, you have some money to invest, then this strategy might be right for you. So back when I was young and dumb and I had this huge ego about me, I used to go and buy stocks, and I always picked the wrong ones because I would pick the expensive tech stocks and I would buy at the high at their peak and sell at their lows. And what made this worse is that I do this after reading The Intelligent Investor that was written by Ben Graham, who was the mentor of Warren Buffett, right? The Oracle of Omaha. And instead of investing like Warren, whereas he would pick value stocks that paid him dividends, I thought I knew best and I picked the tech stocks, which are usually much more pricey and they don't give out dividends. Alright, so we have to set things up before we get into this video, and we have to define what an HSA is. The HSA is a health savings account. So the HSA is there to help you save for health expenses that you, your spouse, or your dependents might have. Now there are some other things about the HSA like contribution limits and eligibility criteria that we won't get into today, but if you're curious, please check out my other video. Now the second thing we have to define are dividends. So dividends are basically a sum of money that is paid periodically, typically quarterly, to the shareholders of a company out of the company's profits or reserves. The most famous example I can give you is Warren Buffett's company, Berkshire Hathaway, actually owns 9.2% of Coca-Cola. And at the end of 2022, they made $704 million in dividends alone from Coca-Cola. Talk about all the Lambos that he can buy with that money. So the point of dividends is that they really are a way for you to make money without doing anything at all. Alright, so we discovered that we're not Warren Buffett and we don't have the skills to invest in single dividend stocks. So what do we invest in? That's right, we invest in ETFs and mutual funds. And what ETFs and mutual funds are is that they're basically baskets of stocks. So in my last video, I decided not to go into VDADX, the Vanguard Dividend Appreciation Index, because I'm more of an aggressive investor. But if you're not, if you are a more conservative investor, then I really think that VDADX is a really good choice. I still want those turnover fees to be a little bit less, but we're talking about dividends here. They do have an excellent expense ratio of 0.08 cents, which means that if you had $10,000 invested, then you're really paying $8 in fees for the year. And you know my ideal, preferably I want my expense ratios to be less than 0.1%, and this fits the bill. But still though, that turnover percentage can still be a little bit lower. I'm just gonna harp on that all day. Now in the bottom here, we see that their dividend yield is 2% and they distribute that quarterly, which is great. So that means with 2%, they are paying about 80 cents for the year. And you can basically go and look at their distributions history right down here. And if you add up all of the distributions that happened in 22, they basically add up to more or less 80 cents. So another thing I often look at is the performance, because you have to look at that, right? And VDADX is not that bad. In the 3-year and the 5-year where we're investing for the long term, we're positive. 14% is really good. 18.5% is really good. And I know what you're thinking. You're taking a look at the category highs. It's not beating its category highs because 194.6%. Why would I invest in this when I can invest in something else that gives me 197.6%? But remember guys, people who invest in dividend strategy is basically not looking for wealth. They're looking for consistent income. And looking at the category return low, well sure, these guys made almost 200%. They almost dropped as low as 25%, right? Can you stomach that loss? And the same one here, right? They are negative when it comes to the return low, but really high. So that means what that tells me is that there's a lot more risk. And basically VDADX is plopped somewhere in the middle, and you just gotta ask yourself, alright, am I okay with having things just right? For me, if I'm a conservative investor, that's exactly what I'm looking for. Another thing that I also look at is I also look at geography, right? Where is this thing based in? and we're going to take a look down here. Most of the stock geographic breakdown is in the US, which is what I want, because outside of the US, not looking for anything in there right now. And their sector breakdown looks like most of it is in financial services, technology, healthcare, and industrials. And then they have some other stuff like consumer defense, consumer cyclical. I'm okay with that too. Asset allocation, most of it is in stocks, and there's none in bonds right now. The bond market, oh man, it is something to talk about, which we won't talk about here. But I would not be wanting to hold any bonds right now because of interest rates and rate hikes. Now, why do I consider VDADX and similar ETFs, dividend ETFs and mutual funds, low risk? Well, to do that, we really have to look at the charts. And I promise this is not going to be rocket science or anything. It's going to be really simple. So now here we're taking a look at the charts, and basically we can say that, 18 to 20, that is when we in North America have not seen COVID yet. And looking at the price, it's been hovering around 27 to around $30, right? I mean, I think it was around February when COVID really came to North America, and then shit hit the fan. So at that point, at February it was $35, from 2018 to about 2020. In those 2 years, it hovered around 26 to $35. So around a $9 raise, but it also dropped below to $24, $25. So you could say that it's pretty consistent. Now, from the start of COVID, where we saw this huge drop, it only dropped as low as, let's say, around $25. So that is a really resilient portfolio, right? It didn't go off the ground like a lot of stocks did, right? And since then, since they printed a lot of money, it rose to around the price that it is at now. $40. So when things recovered by around, let's say, 21, you could say that it was around $38. It rose to that because of all the fresh funding, because of all the quantitative easing and printing of money. And really, since then, from that point in March 21, it really hovered around 37, 38 to now, which is $40. So you can really see that this is really consistent. You're always going to be around plus or minus $5, which isn't a big deal. But compared to other more volatile mutual funds or ETFs, I'd say that this is a very consistent performing mutual fund with consistent price action. So now you might be asking, well, Donald, why would I want to invest in something like that? Don't I want to invest in something where the price just shoots up? Well, then you're probably not looking for a dividend stock. You're probably looking for something like Bitcoin, right? And the thing about that is when you need money, you're probably not going to be able to liquidate that, because I, for example, bought Bitcoin at $50,000 and now it's sitting at $27,000. And would I sell it right now in order to liquidate? No, I'll be taking a huge loss. But if your charts look like this, if it's consistent, then plus or minus $5, you're not gonna worry about it. You're not gonna go raise hell about it being plus or minus $5. Or minus $5, because if it's a plus, you would really like that. The point I wanna make here is that this sort of stuff, VDADX, has less volatility, which makes it less risky. So for people who are conservative and not aggressive and more risk adverse, and they just want a little bit of interest, a little bit of dividend interest sprinkled on their investments, then this might be a good way to go, so that whenever they need money, they can go knowing that they can easily liquidate this sort of fund. And on top of that, they're making a little bit of dividend interest through the times that they're holding that fund as well. With that said, I also want to tell you that if you are looking for ETFs, now I'm looking at mutual funds because my HSA only allows me to invest in mutual funds. Just Google, ETFs similar to VDADX, and you can see a lot of ETF alternatives to VDADX, one of them being VDIGX, which a lot of YouTubers talk about. And I won't talk about that here because this video is already getting very long. But I also want to show you guys, look at the expense ratios, because that'll be easy to tell what you want to look at. And when I looked at this, I looked at the one with very, very low expense ratio. Just click that to sort it. And the lowest one is the Morningstar Value ETF. That might be something you want to look at. I know what you're thinking. The year to date is minus 3.45%, but 2023 so far has been a very down year, so I am not surprised. What you want to do is go do the research, look at the 3-year and the 5-year performance, and ask yourself, is this something that fits me as a conservative person? If it does, then
you could get into it. But if it doesn't, then you can just do a pass.
Don't overlook the dividend strategy. The VDADX and the VDIGX aren't the only dividend ETFs and mutual funds out there. There's a lot more. So now you know what to look for. You know to look through performance and what years to look for. You know how to find the right ETFs and mutual funds for your own dividend play. So go get paid, and after that, come back and watch this other video on how to save and maximize your health savings account, because you're already doing so much. Might as well learn about that too.